you are sitting on the screen daily, and that is your philosophy of technical analysis or news flows, then it is fine. And my genuine advice would be, people who are not part of the market should not even think of doing trading in the market, because they are busy in their own work, they are busy in their jobs. Leaving all this, if you start taking calls on the market based on certain WhatsApp news and everything, you are bound to lose money eventually. I think markets are all about fundamentals, markets are all about earnings. There has to be some basis, right, why you are assigning certain value to the organization, and that value could be a replacement cost value or a buyout value. Whereas on the trading side, it is all about near term news flows, near term kickers in the market, near term noise in the market, liquidity flow, and which don't go well from a longer period of time. And when, as I said, when tide turns, it is extremely difficult to exit those markets. I think there is a lot of risk involved in that. Unless and until you are a very informed investor, you have done your work on the company where you are investing, you can invest directly. But otherwise, it is a very high risk, high reward game. And we have seen during global financial crisis, there were big scams which came into play in 1990, 91, and in 2000 on the dot-com bubble. I think people lost a significant amount of their wealth. When you start taking small bets, you start making money, and then you feel that I know the market, and then you start taking bigger bets. And some of the brokers allow you to make those bets because of their commission structures they want to earn. So my advice is, please look at equity markets from a long-term compounding perspective. People have not understood the importance of compounding. Don't go by this WhatsApp messages, don't go by this near-term frenzy that I will buy today, sell tomorrow. Again, it depends on the education levels of that investor. If he is really able to understand all the asset classes, all the sectors, and he knows he is in this game day in day out, then it is fine. But again, a individual who is not into this market for on a day-to-day basis, I think it is going to be difficult. It is better to go to the advisors like Scripbox. I think it is all about knowing more in detail. If you know better, then fine, you can do it directly. But if you don't know, then why break your head? Please concentrate on your business. Please concentrate on your jobs, and leave it to people like Scriptbox and us to help you out in this journey. When you are sick, you go to doctor, right? You don't try to treat yourself. So it is like leave it to the professionals. They will do as best diversification as possible. See, excessive diversification is also not good. So the knowledge or the learnings what we have as an organization will really help us to manage your risk in a much better manner as compared to an individual taking so much pain in diversification and in taking risk.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully before investing.